Tesla has had nothing but good news that I can find this morning and started off quite well ahead of the market, up like $3, $4, but has been ratcheting down ever since. Maybe profit taking, unclear at this point, but looks like it might even head into the red for a minute. With all this good news, I'm kind of thinking maybe it ends up in the green by the end of the day, but who knows? Of course, we never know until the fat lady sings. Are we still allowed to say that? All right. Well, we start off with a couple of regulars on the channel here from X this morning. We start off with Tesla Larry. He says, listen, Tesla's U.S. production numbers through July 2024 per Automotive News, he says, which is a highly trustworthy source, sales are robust across the board except for the Model S and X. Model 3 shows a modest growth. Y is still sizzling. Cybertruck will significantly increase in output, I suspect exceeding 10,000 per month by the end of the year. And then he's saying he now expects total U.S. production to possibly exceed 615,000 in the third quarter, a growth of about 10%. And you may have heard Brian White yesterday, who pays very close attention to these things, suggesting that he thinks we still might have a 2 million unit year. Okay, go Brian White, go Tesla Larry. And then we've got Jeff Lutz. Also this morning on X, he says that EV registrations outpaced the total U.S. auto industry in June. EVs increased where ICE and hybrid were negative year over year. EVs up 3.3, 108,000 units. Total auto down negative 9% to 1.2 million for June. Tesla led with 61,000 registrations, or 56.4% share of the BEV market. That was, then we've got this also, this is from Gary Black in X this morning, saying China posted another strong week. 14.3 insured registrations for the week of August 12 to 18. After 7 weeks, China's third quarter is up 16% year over year and 34% quarter over quarter. Third quarter remains on track to be China's best quarter ever. China's strength has been driven by 0% interest rates, auto loans in China. Yeah, so like I said, good news, good news, good news, more good news. This is from AJ this morning. He, of course, goes by 𝐓𝐿ojo, A-L-O-G-O-H. The European Commission reduces tariffs on Tesla China-made Model 3s to 9% from 20.8%. This is exactly in line with what Elon hinted on the second quarter earnings call when he said, we are confident that we should get a better rate than what they have imposed for now. So, of course, they had come in suggesting they were going to have a tariff of 20.8%. That would be huge. Now it's looking like they come in around 9%. He says this will make Tesla Model 3s cheaper in the European Union and hence increase sales volume. There is significant price elasticity in the auto market. For this reason, quarter 4 2024 will likely see a noticeable uptick in Model 3 sales in Europe. More good news. By the way, how does that all fit with my tariff comments the other day? When a company sells directly from their factory to consumers anywhere in the world, of course, a lot of what I was talking about, it's not less true, but there's less flexibility. So if you're importer selling to a wholesaler, selling to a retailer, selling to a consumer, there's a lot of things that can happen there in the middle. But when you're selling direct, as Tesla does, guess what? The manufacturer has to either eat the tariff or not. There's not like a lot of other places that you can find ways to maneuver these price changes. So in this particular case, a tariff, you're going to try to raise the price if you can because you're in touch with the consumer on a day-to-day basis. But if you can't, you have to either, as I said yesterday, on any tariff anywhere in the world, if you can't raise the price, then you have to decide to either eat it as a manufacturer or eat part of it or not sell. The consumer may or may not be willing to pay that higher price. And as I pointed out over and over yesterday, and didn't get too many arguments back actually on X, if the consumer is unwilling to pay the price increase, or if they're willing to pay the price increase, you have to ask yourself the question, why didn't I raise my price a week ago before the tariff? I could have been making more money. no, this is not what happens in a good capitalist, I mean, in the way that normally happens. Okay, Sawyer Merritt saying this morning, I mean, the news just keeps getting better and better. Sawyer Merritt says, listen, breaking, Tesla China says construction of its new Shanghai Megapack factory is now 45 complete just 3 months after construction started, a new record. Initial capacity of 10,000 units per year, as we've talked about. That would be about 10 billion of revenue per year from that one factory. And that would be about 10% of Tesla's current revenue and a doubling of their revenue capacity for these megapacks. Elon has indicated that the combined capacity from both megapactories might be about 30,000 units, or tripling the current revenues. And that doesn't count the power walls. So it's getting to be we could be looking at, say, 35 billion by the end of 2025. The run rate might be 35 billion from energy storage alone. This is the 𝐓𝐫𝐬𝐲𝐬 letter this morning. Oh, I'm sorry. I'm going into the economic news without introducing myself. I'm Randy Kirk. I love it when people hit the like button. I like it even better when people decide to subscribe, because it helps my algo and does all kinds of good things. And then if you get notified, that helps you to remember to come on back later in the day, because Brian Wang is that's probably what we're gonna do around the noon hour. He's got some news on X and XAI that are important to Tesla. And I think you're going to want to see this stuff. And in fact, Brian's got 3 or 4 amazing stories going right now. I don't even know where I'm going to be able to fit them all in. And then tonight, Nick Gibbs will be here. And if you are listening to Nick Gibbs on Tuesday nights, you are missing out on a completely different understanding of markets. Remember, he is actively involved in the whole AI thing. He's actively involved in the retail space. He knows a lot of stuff firsthand. The guy is really, and has been an investor for half of his actual life. So, all right, we've got this from the 𝐓𝐫𝐬𝐲𝐬 letter. Oh, did I mention Patreon? Yeah. You know what to do. You just go down there, just click on the thing. It's very simple. Breaking: U.S. bankruptcy filings hit 6,276. That doesn't mean anything to anybody, right? In the second quarter of 2024, but this is what does matter. It is the highest level since the second quarter of 2017. The number of companies declaring bankruptcy has doubled in 2 years. Chapter 7 filings, also known as liquidation bankruptcies, reached a whopping 3,151 in quarter 2, the most since the pandemic. Chapter 11 cases, these are reorganization bankruptcies, hit 2,462 last quarter, exceeding every other quarter of the past 10 years. Then Chapter 13 and other bankruptcies rose to 469 and 194, respectively. Bankruptcies have been rising at a pace only seen during major economic downturns. We'll talk more about that in a minute. The 𝐓𝐫𝐬𝐲𝐬 letter goes on with another piece of information. Of course, you know how much I love his data. He gets great data. The U.S. economy is now almost entirely driven by the services sector. The services industry now accounts for 72% of U.S. GDP, up from 60% in 1990. By comparison, in the 1950s, services were just 47% of the U.S. economy. So that's a big, huge uptick. On the other hand, manufacturing sectors, which has declined from 27% in the 50s to only 10% now. Now, there's I went and did a bunch of study on this, which I'll probably do some kind of a episode on maybe over the weekend about this services sector. And there is one sector that people disagree about where it should sit, and that is construction, and that includes housing construction. Housing construction is about 4% of the economy, overall construction about 10%. Obviously, if construction of all of that 10% is in the services sector, then manufacturing couldn't be 9%. Anyway, you get I'm sorry, if it's in the manufacturing section, then it couldn't only be 9%, or 9 or 10%. So probably apples and apples, we might be looking at 20% overall manufacturing, counting construction. That's my initial look. But it's still a big thing now. Services take up a lot of the economy. Meanwhile, the ISM Manufacturing PMI Index has shrunk in 20 of the last 21 months, marking 22 months without 2 consecutive readings of expansion. This is the longest streak since the 1990s. Services are what are keeping the economy alive, according to 𝐓𝐫𝐬𝐽, and for once I agree with his conclusion, not just his stats. I'm sorry, it's all about 𝐓𝐫𝐬𝐽 this morning. He says in another sign of weakening consumer spending, restaurant spending fell 3.9 year over year in July, marking the largest decrease since 2020. This is a sharp reversal from the 1.9 increase in June. So when you start to see a contraction in the rest of the economy in June, then people are going to start pulling in on things like restaurant food in July. Food inflation is a major issue, with fast food prices alone rising 31% over the last 4 years, all while over $2 trillion of excess savings have been depleted in that 2 years, adding further pressure on consumer spending. Food away from home now is a luxury, and that is confirmed by surveys that have been taken. And then we have this, Lowe's missing today, also guided lower for the balance of the year. And this matches the bad news that Home Depot gave us, I think, a week or two ago. All right, now Forbes magazine has finally come around to agreeing with me. It took them long enough, don't you think? I mean, I assume they're watching the show every single day. They say another possible explanation for how things are kind of cattywampus in the economy right now is that the indicators that we've been trusting maybe are still remaining valid, but our understanding of recessions might need to evolve. Some argue that aggregate GDP numbers no longer capture the full scope of economic activity. In other words, certain sectors of the economy could already be in recession, but overall data may not reflect this. A recent paper from the San Francisco Fed highlights that different household groups have experienced diverging economic outcomes in recent years. Following the COVID-19 pandemic, all households accumulated significant liquid wealth due to reduced spending opportunities and emergency income programs. Does any of this sound familiar? However, lower income households depleted this extra wealth 2 quarters earlier than higher income households. Additionally, the credit card delinquencies among lower income groups returned to pre-pandemic levels a year sooner and doubled in size. As a result, both non-essential consumption and savings have sharply declined for the folks under roughly $100,000 a year. But now it's sneaking up into $120,000, $130,000 a year. Given that consumption and savings, which are closely tied to investment, make up the bulk of GDP, the overall positive growth numbers suggest that higher income groups are driving current economic activity, while lower income groups may be dragging it down. There's limited recent data on the distribution of savings and spending by income groups to confirm this assumption. The Bureau of Labor Statistics provides detailed data, but the most recent figures are from 2022. If this assumption holds true, it could mean that part of the U.S. economy is in fact in recession. We just haven't been looking in the right places. If we separated the higher income group from the rest, we might see an economy that is thriving alongside one that is in decline. And I wouldn't even give it the thriving thing with regard to the high income groups. I would say they're doing okay. This hypothesis aligns with recent opinion polls. Yes. Research from a firm published just weeks ago indicates that 60% of Americans believe the economy is in recession, despite 7 consecutive quarters of positive GDP growth, with another likely on the way. Did you know that there have been examples of where the recession started with the GDP numbers positive, and then those positive numbers were eventually turned negative, not only a month later, not only 2 months later, a year later? Sometimes it's a year before the economists figure out that we were already in recession in terms of even the GDP numbers. I suspect that's what we're going to see about the third quarter. Even the second quarter, maybe, but I don't think the second quarter was in recession yet. I think it will be the third quarter before we actually go into negative GDP. Some attribute this perception gap to misinformation, but many consumers particularly those in lower income groups, report real difficulties making ends meet, which are exacerbated by persistently high prices. A recent report from the University of Michigan, which we report on here, which produces the Consumer Sentiment Index, echoes the idea that consumers are split. It notes that higher income consumers, who are responsible for a substantial majority of aggregate spending, continue to be supported by relatively strong expectations for their income and fewer worries about higher prices. However, if income growth weakens higher up in the income distribution, robust spending is unlikely to continue. What I've been noticing over the last 4 days, over the weekend, since Friday, left-leaning economists are continuing to pile on regarding the disastrous opening gambit from the Harris folks with regard to the price-fixing idea. The only people I see on X supporting the idea that we should be looking into price gouging in a non-emergency time are those who have zero background or understanding of economics, economic history, or of business, and have how things get priced in a capitalist society. But people who have an understanding, who have looked at history, have looked at Venezuela, have looked at Russia, have looked at China, know that all of the, looked at Argentina. It just goes on and on. If you look at history, price fixing by the government is just never a good idea. Oh my goodness. So where are the markets now? Let's see if Tesla's managed to stay in the green. Yes. Okay. It went into the red. It bounced back into the green. At this exact moment, Tesla is sitting up 48 cents. Let me double check that to make sure I'm right. That is correct. All that is correct. It is sitting now down 49 cents. So boy, it is really right around the middle there, as is the rest of the market. The Dow Jones is down 50, NASDAQ down 47, S&P down 6.93, almost 7 at this point, and Tesla down 61 cents. We've got the rest of the Mag 7 also split. NVIDIA down, Microsoft up, Meta down, is that just like that. And then we have got the Cathie Woods also split, more down than up, but again, all in a kind of like zero. This one's we've got up 9 cents, up, down 32 cents. Yeah, so very much split around break-even, except PayPal. PayPal's having a great morning, up 230. Wow, look at that. But yeah, now Tesla's down $1.07. So market is starting to kind of move downward in general. Tesla now down $1.27. Let's stop looking before it just gets worse. So let's go ahead and take a look at those bonds. What's happening with the bonds this morning? Well, they were down 3. And now they're down. Boy, things are changing as fast as I can watch it. So we've got the 10-year now, the yield's down 3.8 basis points at 3.829. That would indicate, based on yesterday and today's numbers, getting down to 3.829, starting to look like the bond market believes that there's going to be a cut in September by the Fed. I am not convinced. I think we've got data points we still need to see before I'm going to be convinced of that. Now, the 2-year is down 66.1 basis points, heading towards getting under 4, getting into 3 handle. And that would give us, though, still a 17% difference, 17 basis points difference, which is way up from where it was, of course. And the 2-month is down only 1.8 basis points, giving that a difference of the moon. The inversion between the 10-year and the 2-month is nuts. And then we can go on to the oil market. We have got the oils. We got oil up a little bit this morning, rebounding. Yeah, it went way too far. I would be surprised if this has got to be kind of a bottom in oil. Is that investment advice? Well, sometimes there are times, if you like to buy commodities, I would say right now oil is probably a buy. That's just me. Natural gas down 1.97 after being up 5% yesterday, 5% or 6%. Huge up move yesterday, now down 2% today, just bouncing around all over the place. I would stay, unless you really know that business, I'd stay clear of that area. Okay, we've got gold at a new all-time high, 2,564, up 20, almost 23 points $23 this morning. Silver up 1.28% at 29,685. Just really thinking it might like to go back over 30 again. And copper going the other way, down 0.1% this morning at 4.177. The dollar is up against the euro and down against the yen. Yen of 0.57, euro up 0.14. And then Bitcoin is up 875, but still staying under 60. Looks like that 60,000 is going to be kind of that barrier that it has a hard time getting over. All right, let's go ahead and jump back for a minute to the equities again. So we have got Tesla moving slightly back up again. But you guys, I didn't give you the percentages earlier. So the Dow is at this moment up, down 0.1, NASDAQ down 0.3, and S&P down 0.14, and Tesla down 0.44, and the Magnificent Seven still mixed, although maybe heading back to the green. So in general, right now, things seem to be, it's like this. It's like this, not going much of any. Now, remember what I said at the beginning of this week, there's so little economic news. Now, we do have two things tomorrow that we're going to be looking hard at. One of those is going to be this adjustment in the employment number. That's going to be maybe, according to reporting, it's going to be like almost 700,000 jobs wiped out from the numbers that we've been believing all this year, maybe even 1 million wiped out from the numbers we've been believing. And then we've also got the Fed minutes tomorrow. So that's all the news that we're going to be seeing tomorrow, but it's a couple of pretty big ones. And I think the Fed minutes come later in the day, so it won't be something we'll be reporting it after the bell. All right, so what do we got coming later today? Brian Wang is coming up later today. We have got Nick Gibbs later tonight. And then yesterday, Brian White and I did a report where we looked at the FOMO, expected FOMO, which I think has already started with regard to 1010 on Tesla stock. And we also looked at the current used car market as a harbinger of things to come, not only in the economy, but also with regard to Tesla's used car pricing and whatnot. So that card will be right there. And for you, looking forward to good news tonight. Lots and lots of good news this morning. Why is Tesla down? We'll be figuring that out later today. It has been grand talking to you.